Briefly, 5 things to know about gold. Quantitative easing is counterfeiting. You debase a currency by making more of it out of proportion to the growth in the economy, which we're doing. Debt and deficits. Our federal debt, including off-balance sheet liabilities, entitlements, is unserviceable, particularly with a budget that's $3 trillion a year in deficit. It can't be done. The most pernicious, of course, is negative real interest rates. If you look at the arithmetic, as we did in the last interview around the U.S. 10-year Treasury, they pay you 2% in a currency that's depreciating by 6 or 7% a year. Jim Grant calls this return-free risk. If ever there was a circumstance that would call into question the diminution of purchasing power in conventional savings and investment assets, it's the absolute guarantee of the U.S. government that they promise to make you poorer. The fourth, of course, is the fact that with negative real interest rates, the largest institutional investors in the world, people whom characteristically carry 40% of their investment portfolio in bonds, have to begin to disintermediate from bonds because the bonds guarantee that they won't be able to make their pension obligations. Some of the money that goes out of bonds, I suspect, will go into an instrument that has almost a millennium-long track record of protecting people from the depredations of the currency, which is to say gold. Finally, the market capitalization of precious metals and precious metals-related equities in the U.S. is reported to be 0.5%. The 3-decade mean is 1.5%. If quantitative easing, negative real interest rates, debt and deficits, disintermediation only cause demand for precious metals and precious metals-related assets to return to mean, that demand would triple. I hate to be hedged, it's mixed. There is so much cash on the sidelines, that the immediate impact in investment markets doesn't need to be large. There's a lot of money that's looking to be employed. And the lessons that we have learned over the past 40 years have meant that many people have been schooled to buy the dips. So my suspicion in the near term, at least in financial markets, is that the response is going to be fairly muted, simply because there's so much cash on the sidelines. But I think that disguises larger challenges. The first challenge is very simple. The last 40 years that we've lived through, Michelle, that I've lived through, maybe not you, that an older person has lived through, have been the most benign economic climate in the history of the world. We've benefited from so many tailwinds, the productivity of the baby boomers coming into an end, we're dying. The impact particularly of lower interest rates. How do you lower them below zero? The impact that we've enjoyed from globalization. The world is becoming more nationalistic. There are a whole bunch of tailwinds that we've enjoyed over the last 40 years. And I'm not saying that the next 40 years are going to be catastrophic. I'm just saying they're going to be less benign than the last 40. People have said to me, when are voters, when are investors, when are consumers going to take note of inflation? They've noted inflation, but it hasn't bit them yet. And they've been schooled not to worry too much about inflation because they've been through 40 benign years. I suspect over 2 years of higher gasoline prices, higher taxes, higher rents, higher home prices, higher grocery prices, when people realize that a 3% wage increase is a 6% decline in their standard of living, that people will again take inflation into account, much as they did in the decade of the 70s. So I suspect that what we're seeing is a delayed reaction to a set of circumstances that people understand but aren't taking seriously yet. Looking out longer term, in my lifetime, we've always corrected excesses with recessions. It seems as though Congress has decided, in addition to controlling the Russian gold sales, that they can control recessions. I'm not sure they can do that. We have, as an example, a skills gap in American society. We have 6 or 7 million jobs we can't fill, and the labor participation rate is the lowest in history. This is an ugly circumstance, and I have no idea how we address it. Secondly, about once every 10 years, for most of my life, there's been some form of confidence, crisis in confidence, some form of liquidity squeeze. 2008, being an example. But it seems like once every 10 years, we have a circumstance which causes equity markets, at least, to decline by 40 or 50%. And I think that the crisis in confidence that might engender in the broad economy, the impact that might have on investments, could be serious. And in that circumstance, when I describe in particular the natural resource economy, the one real risk factor that we need to consider in terms of natural resource markets and all markets is the possibility, at least, of a recession, not just in the United States, but in fact, a global recession. I'm not smart enough to quantify that, but it's certainly something that's in the back of my mind, particularly when you look at the reversal of 40 years of declining interest rates, and when you look at the skills gap that we're experiencing in the United States. I could see oil prices coming down from here. I could see the oil company narrative coming down from here. But the net present value of these companies, the net present value of their free cash flows at $70 oil is higher than their share prices. For income investors, dividend investors, investors who take a 5-year view, this is a really easy trade.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.